This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Ukraine's president said on Monday that trade at the country's ports was at a standstill and urged the international community to take immediate steps to end a Russian blockade to allow wheat shipments and prevent a global food crisis. Volodymyr Zelensky made the comments after speaking to European Council President Charles Michel, who was visiting Odessa, the major Black Sea port for exporting agricultural products where missiles struck tourist sites and destroyed buildings on Monday. For the first time in decades, in Odessa there is no regular movement of the merchant fleet, there is no routine port work. This has probably never happened in Odessa since World War II, Zelensky said in a video address.
Retail gasoline prices in the United States rose on Tuesday and hit another all-time record, surpassing one set in March, as global refineries grappled with a bottleneck that has sent prices soaring ahead of driving season. The average cost of a retail gallon of gasoline hit $4.374 early Tuesday, according to the American Automobile Association, surpassing the former record of $4.331. Since March 30th, Brent crude futures have lost 7%, but gasoline futures are up 9.4%, and hit a record on Friday of $3.7590 per gallon before selling off on Monday.
Moving on to the top news in the energy sector.
German officials are quietly preparing for any sudden halt in Russian gas supplies with an emergency package that could include taking control of critical firms, 3 people familiar with the matter told Reuters. The preparations being led by the Ministry for Economic Affairs show the heightened state of alert about supplies of the gas that powers Europe's biggest economy and is critical for the production of steel, plastics and cars. Russian gas accounted for 55% of Germany's imports last year, and Berlin has come under pressure to unwind a business relationship that critics says is helping to fund Russia's war in Ukraine.
Oil prices fell in volatile trade on Tuesday as the market balanced impending European Union sanctions on Russian oil with demand concerns related to coronavirus lockdowns in China, a strong dollar and growing recession risks. Brent crude was down 88 cents, or 0.8%, at $105.06 a barrel at 0924 GMT, while U.S. West Texas Intermediate crude fell 75 cents, or 0.7%, to $102.34 a barrel. The combination of COVID-related lockdowns in China and worldwide interest rate increases to battle inflation put equity investors on the back foot, strengthened the dollar and significantly raised concerns of economic slowdown, said Thomas Varga of oil broker PVM.
Next, we have the top news in metal markets.
Copper prices rose on Tuesday, helped by a slight pullback in the US dollar, although worries over COVID-19 lockdowns in top metals consumer China and weaker global economic growth kept gains in check. Benchmark 3-month copper on the London Metal Exchange (LME) was up 1.3% at $9,361.50 a ton as of 0709 GMT, after falling to its lowest since December 15 on Monday. The most active June copper contract on the Shanghai Futures Exchange ended daytime trading up 0.1% at 71,720 yuan, $10,700.33.
Chinese iron ore futures dropped up to 7% on Tuesday to touch their lowest in nearly 2 months, fueled by concerns of higher interest rates and still stagnant demand at home. The U.S. Federal Reserve approved half-a-point interest rate hike last week, and said could stick to that for the next 2 to 3 meetings and then assess how the economy and inflation are responding before deciding whether further rises are needed. That has led to significant decline in commodities prices denominated in U.S. dollars such as iron ore, GF futures analysts wrote in a note. We will now look at the top news in the agricultural sector. Malaysia's Commodities Ministry has proposed cutting the export tax on palm oil by as much as half to help fill a global edible oil shortage and grow the market share of the world's second-largest palm oil producer. Plantation Industries and Commodities Minister Zoraida Kamaruddin said in an interview with Reuters on Tuesday her ministry has proposed the cut to the Finance Ministry, which has set up a committee to look into the details. Malaysia could cut the tax, likely a temporary measure, to 4% to 6% from the current 8%, Zoraida said.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.